bunch of money tomorrow, where would you put it? So why don't we start with you, Ali?
Our mandate for 16 after this March 9th, which was our last transaction of the year, is we're not putting out any more capital for the balance of the year. Not that we're that dramatic or that disciplined, because I work for a high net worth guy that'll change his mind in the morning. But our mandate right now internally is we're just going to finish all the development deals, expansion deals, renovation deals we have. And I say that because the first 3 months of this year in the US market was horrible from a debt and liquidity perspective. So people are shaking. People who thought maybe they can get something done may still be waiting and hanging out there. And we'd like to see what happens in 7 or 8 months. And also this election is really a lot of noise for all of us, and it's scaring us as to where it's going to go, especially as a family business. And so we think, let's not be greedy, let's wait and revisit towards the end of the year.
Sounds good. And Rob?
We're still comfortable with the GTA in Vancouver as long as it's affordable product. We did a deal recently in North Vancouver, 4-story wood condominium. Vancouver probably builds the best looking condominium projects in Canada. Their city approvals and design committees are much tougher. Toronto's actually learning from that. The average sales price on this condominium was $560 a foot, which is, by the way, about the average in the GTA, so not high. We looked at that and we thought this is going to sell in good times and bad. The truth of the matter is we're about to launch and the number is going to be about $625 a foot, still relatively affordable in that market. So those are not easy deals to find, but if you can find them, they're golden. And we feel the same way in Toronto. So we tend to be always in 416 for mid-rise. But for low-rise, we recently did a deal in Vaughan, a townhouse project, 200 towns, priced at under $700,000 a unit. That will sell all day long in good times and bad as well. So we're trying to play defense, but those two developments have yields, IRRs, projected IRRs of 21 and 27%. So you can still get terrific yields if you don't have too much money to try and put out. So our funds tend to be fairly small.
Okay, thank you. So lastly, Frank?
Yeah, I would give you my answer, but I'll make a comment about what Rob just said. I think it's interesting, the spec market in both those territories, Ontario and Vancouver. You know, the spec market, or the shadow market as we call it, in pre-selling condos used to be a two-legged stool. Now it's a three-legged stool. So the two-legged stool used to be, you know, guys or girls who'd be going out and buying units for cash flow, right? That was probably all of us at some point. And then the second stool was, you know, guys or girls who are going to flip the product. Well, Vancouver's got a third stool, a third peg to that stool. And that is capital placement. So the Asian market is coming into Vancouver, buying units and not filling them. They don't want renters, they don't want anything, they want a safe haven. So there's now flippers, cash flow buyers, and safe haven purchasers. And so in Vancouver, I'm thinking what's going to happen politically is they're going to shut that down. Sure. And they have to, because of some very serious things that are happening in that marketplace, which if we had half an hour, I think you'd find fascinating.